Good afternoon. Welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, Securities Offer My Money Block. This is where I want to take a look at a basket of stocks that I think have some interesting potential. I'm going to take a look at the chart so you can actually see what they've been doing, get some context there, support and resistance, so you have some general idea of what the sentiment is for the underlying. And then we'll utilize the option analysis to give you an estimated move for the next 3 and 10 trading days. So let's jump right in. I want to take a look at gold. Gold has been on everybody's radar. It's been quite the story, and it has had quite a precipitous drop. I'm actually taking a look at the ETF GLD. You can see from the chart, it has dropped off. It's gone through that green line, the red line, and the black line. The green line is the 20-day, the red line is the 50-day, and the black line is the 200-day moving averages. That tells me that the commodity gold is in a downtrend, and it is under a ton of pressure. And today it's down another 83 cents at 115.91. Now with that, you get a firm idea that the shiny metal is under pressure. That tells you that there's not a lot of uncertainty in the marketplace. There's not a lot of trade that would be considered protective. Normally, you'll see individuals where there's uncertainty or they're looking for a little more protection or safety, they'll go to gold. Well, that trade's been off, and that's been off basically, we could say pretty securely that this has been off for the last month and a half to 2 months. We'll say month and a half since April 18th. We've seen a precipitous drop. Now, GLD, the implied volatility is relatively inexpensive. You'd think just because it's dropping off and dropping off pretty precipitously that implied volatility would be high. And for those of you that don't know what implied volatility is, that is a calculation that gives you a forecast of potential movement in the stock underlying. And right now, it's running at an implied volatility rank of 12. On a scale of 0 to 100, 100 being the most volatile and 0 being the least volatile, it's on the lower part of the scale. So it's telling you that while gold is moving to the downside, there is no expectation that there's going to be any further violent moves at this juncture. As a matter of fact, over the next 3 days, you can expect that GLD can be in a 75-cent range, either up or down. Currently, it's down 75 cents today. And for the next 10 days, you can see a $1.36 range, either up or down in GLD. So you're roughly seeing a little bit less than a 1% move being forecasted for the next 10 days in gold. Now, that could change, of course, on the turn of a dime. A headline out of North Korea or Europe or here in the United States, that could move gold in either direction. Sticking with the metals, I wanted to take a look at the metals and mining ETF XME. This is an interesting one. It's currently trading down almost 1%, 0.97%, down 28 cents. That's $28.45 stock. You can again see that it has dropped precipitously all of basically 2016, or at least since the middle to late part of the first quarter to current date, May 5th or May 9th. So with this pullback, you're seeing that there's a little bit of a base here. That's telling you that the metals and mining sector, while it's been beat up, is consolidating. And you want to keep an eye on that. Miners in England were on the move. You actually saw that this morning when we were talking about that on the open in Europe. We do that every morning at 8:45. Currently, right now, this ETF, the implied volatility is running right around 31, 32. What does that mean for you? Well, if you rank that, the implied volatility rank is at a 9.7. Folks, it's really low. So even though the stock has been moving down, in this case the ETF has been moving to the downside, a lot of people would associate that with high implied volatility. Well, it's not. It's actually historically at its lows. So there's not a heightened expectation of big violent moves at this juncture for XME. Specifically over the next 3 days in this $28 stock, there's a 47-cent range for the next 3 days, so the end of this week, and it's already moved 29 cents so far this week, and specifically today. And you're seeing for the next 10 days an 88-cent move in this $28 stock. Interesting moves being priced in. You're seeing, basically about a 3 to 4% move being priced in for the next 10 days. Want to keep an eye on that, especially if we start to see that the miners are picking up, whether it's in the UK and Europe, or we start to see metals move because we get some decent data out of China overnight. The CPI and PPI are going to be coming out. So watch this. Another vehicle that I want to take a look at is QLD. This is the ProShares Ultra Bullish QQQ ETF. Now, this thing has been on a tear basically since 2009 and it hasn't looked back. And the reason why I want to bring this up is because tech has been the leader. All you hear these days is FANG, FANG, and more FANG. Even Buffett is fanged out. So with that being said, I wanted to take a look at QLD, which is the ProShares Ultra Bullish QQQ ETF. Right now, the implied volatility rank is coming in at 21. So the trend is definitely to the upside in bullish, both in the short term, intermediate term, and long term in QLD. With the implied volatility rank at 21, there's not an expectation of big violent moves. And if you look at these bars right here, you can see they're relatively contained. Yes, they've been trending to the upside, but they're small. You're not seeing big erratic moves to either the upside or downside on a daily basis. It's just a grind. That's what implied volatility gives you an indication or an expectation. The higher that implied volatility rank, in other words, 50, 60, 70, 80, 90, that is telling you then there's a heightened expectation of potentially big violent moves, and you should then see potentially bigger types of daily moves. QLD right now, pricing in for the next 3 days, or 10 days, excuse me, about $2.24 in range. Right now it's up 52 cents today. So basically through the end of next week, you're seeing roughly about a 2% move being priced into QLD, either up or down in this ultra bullish ETF. I wanted to take a look at Apple. Everyone's talking about Apple. So let's put context. Apple's at all-time highs at 153.66. It's up another 64 cents or 0.43%. The implied volatility rank is coming in at 42. So when you see the implied volatility being running around 24 to 21 on Apple, it's starting to get a little bit expensive. With that being said, in a rank getting in the 40s, it's still on that lower third, almost at a half, right in the middle, but there could be some more violent potential moves, and you've seen that, especially on the upside. You saw yesterday after Buffett announced that, yes, they are putting a further larger Apple position on for Berkshire Hathaway. The stock was up 2.3%, the largest boost that we've seen in probably 2 years. Now, with that being said, you see that implied volatility has stayed up. That means that not only can it melt up, but it can also melt down. We're going to watch this one very closely. It is trading off of its highs today and on the lower levels, but still up 64 cents. Right now, the Apple options for the next 3 days are pricing in another $1.82 in range. With the stock up 64 cents, you could roughly see about another $1.20 for the next 3 days, and about $3 going in for the next 10 days. So you see an interesting move being priced in right now into Apple. $3 isn't going to kill you. You already saw it move $4, but $3 is a pretty decent move, and that could be either up or down, and implied volatility rank is on the move to the upside. So in other words, we could expect maybe some potential bigger moves, either up or down in Apple. We're going to watch that one very closely. Levels that you're going to want to watch in Apple, watch this level right here. This green line right here is the 145 mark. That is the 20-day moving average. That's where the short-term traders could be put under pressure if Apple starts to dip below the 150 mark and challenge 145. Finally, I wanted to look at emerging markets. Since China is coming out with some key data, the CPI and PPI data overnight, wanted to take a look at the emerging markets ETF, EEM. EEM right now is trading up 47 cents at $40.65. Bounced off of its 20-day moving average late last week, and as the bulls have taken control again in this emerging markets ETF. Most notably, the implied volatility rank comes in at 15.7. That's really cheap, not expecting big violent moves, but again, with data like CPIs and PPIs out of China, and there's some uncertainty in China that's starting to resurrect itself. We want to keep a close eye on that. In this $40 underlying, basically for the next 3 days, pricing in about a 0.5% move around 28 cents. And for the next 10 days, about a 55-cent move. So you're seeing about a 1.5% range basically on this $40.65 underlying EEM between now and next Friday. So some interesting moves here, folks. And as always, come to our site. Click on the homepage. As a matter of fact, not only can you check out all of the cool tools and applications we have, but what I will do for you is if you scroll down after you go to MarketStream.live, go to the homepage, go down and scroll down to Does Your Core Investment Portfolio Fit You? Click Learn More. You can take a quick little survey. It's less than 5 minutes. All you need is your first name, last name, and email address. And what I will do is I will actually give you a risk profile of who you are and how much risk really you are willing to take. And as it pertains to your future retirement goals, yes, I will be able to do this in 5 minutes. And I will send you a portfolio that fits. And this is just a test portfolio, a model portfolio that would fit your risk profile. If you're interested, then you can come back and we can talk more. All right, folks, we will be back at 4:30 Eastern Time. I'm going to wrap up all the action that's happened in the markets today. So we'll see you here at MarketStream.live.